All right, so Bitcoin is ripping to the upside, just hit resistance at 30,000. Now remember, 30,000 to 30,500 is your key level of resistance. You can see what's gone on basically since yesterday when FRC, all right, First Republic Bank, when they basically had their earnings announcement, they came out and said that, hey guys, we lost 40% of our deposits in the last quarter. In addition, we saw essentially our business stagnate. All right, that was not what Wall Street wanted to hear. 40% is a bigger number than Wall Street expected. And then to add on even insult to injury. All right, this is the kicker, guys. First Republic, FRC, they basically did not take any questions from analysts in the conference call, and they just said done. And they walked away 12 minutes after they started that earnings call. All right, to me, all right, now remember, JP Morgan, Wells Fargo, all these big banks gave them $30 billion to shore them up. All right, this was a couple months ago when the banking crisis occurred. And for them to just say, hey, we're not even going to take any questions, that's not uplifting to the sector. And so that stock got pummeled yesterday. And as soon as you saw it down 40, 50%, Bitcoin began to uptick. And it started to go better and better and better. Now, the bottom line is, as an investor, this is all inside of the levels. If we look at the chart on the daily chart here, let's go to the daily. So what we could see here is this is your 30,500 level. That is essentially your line in the sand. Like I just said, 30,000 to 30,500, that's what you're keeping your eye on. If we get above 30,500 and we close, you want a daily close, and then you want multiple days, I say 5 to 7 days above that 30,500 level. Now you have a confirmed breakout and you likely could head higher. Aside from that, be very skeptical of this move, because if the banking crisis does not get worse, this resistance at 30,500 to 30,000, that could ultimately end up being a top, and we still could see Bitcoin moving back to the downside. In fact, just to give you a heads up, I picked up a little bitty. If you've been following my Twitter, all right, you remember that last time we hit 30,000 to 30,500, I bought BITI, which is a short ETF. When you buy it, you go short the Bitcoin futures. I covered that for a nice gain, obviously, or I sold it for a nice gain when Bitcoin pulled back. I've now re-entered that trade, and I'm seeing if we can't get a good pullback on Bitcoin off of this technical resistance at 30,000 to 30,500.
In a sudden and dramatic turn of events, Bitcoin's value plummeted to an intraday low of $27,242, erasing its recent gains and leaving the market in a state of shock. The tumble came after the cryptocurrency had briefly reclaimed the $30,000 mark earlier today, following a sharp decline in First Republic Bank shares and the escalating banking crisis. This downturn has wiped out the recent gains made by the digital asset. Hello and welcome to Crypto Street. In today's video, Gareth Soloway updates about Bitcoin's current market standing and his outlook for Bitcoin in 2023.
Ethereum is rallying, but look at the chart here. Look at where we're hitting. We're hitting resistance on Ethereum here. This upsloping trend line, a beautiful upsloping trend line. This is the key point. Now, one of the things I want to mention here, look at how Ethereum is not at the recent highs like Bitcoin is. What does that tell us? It tells us that Bitcoin is your pure play when the banking crisis is going on. Sure, you're seeing a bit in Ethereum, but it's not the same magnitude that you're seeing in Bitcoin, because Bitcoin is a pure play. Always remember that in 10 years, 20 years with Bitcoin, it's the pure play, just like gold is the pure play. If I had to put it in comparison, I would say Bitcoin is to gold as Ethereum is to silver. All right, think about that. Think about how silver doesn't really go one for one with gold, because silver has an industrial side to it plus a store of safety. Gold is just a pure store of safety. So kind of a cool little concept to think about. Bitcoin equals gold. Ethereum is equal to silver when it comes to investing. All right, so watch this level around 1960 on Ethereum. That is going to be a very pivotal level here. Let's see if we get through that. I'm still in the camp on a macro basis, by the way, that we still see a recession in the second half. You're seeing economic news continue to weaken. The jobs number continue to weaken. All this stuff is continuing to show us likely recession. By the way, the Federal Reserve actually told us a mild recession in the second half. Like I've said in so many interviews since I said this the first time, if they're saying mild and they said transitory, and look at what we got. All right. They said transitory inflation. We got horrible inflation. They say mild recession. It's probably going to be a little bit worse than mild recession. By the way, one more little tidbit. The Fed will be announcing a rate decision next week on Wednesday. The expectation is a 25 basis point hike in interest rates. So they're still hiking here, guys. They're still tightening the noose, if you will, around the economy.
Bitcoin had been trading sideways for several days, with volatility back to its lows of early March before the banking crisis began and became one of the cryptocurrency's biggest upward catalysts this year. Beginning late Tuesday, troubles at First Republic helped drive the cryptocurrency's price action again, according to Matt Hoogan. Crypto rallies during banking crises, and it looks like the banking crisis may not be over, Hoogan said. First Republic shares fell almost 30% Wednesday, bringing its two-day loss to about 80% after reporting a massive drop in deposits in the first quarter as customers pulled their money out following the collapse of Silicon Valley Bank.
Keep that in mind. I want you guys really focused on understanding how important even numbers. By the way, that's one of the reasons why I looked at the 30,000 area to 30,500 on Bitcoin. By the way, look at what Ethereum did. Ethereum pierced 2,000 recently, right? It took out that previous high barely and then sold off. There's a tendency in markets, and this is psychologically based in human nature, for us to hit key levels and pierce them. All right, you have stops there. You have people that will jump on board at those levels. Think about how many people jumped on board on Bitcoin when it pierced 30,000 thinking it was a breakout. Yet ultimately it dumped out, took a lot of them out. Now it's retracing back up to that level. All right, so we're going to keep an eye on that. If we look at Bitcoin, by the way, it has pulled back off that 30,000 level very slightly, though, trading back at 29,850. All right, so again, we know 30,000 to 30,500 is resistance. That's really all you need to know. Remember, a technical trader doesn't care necessarily whether it's where Bitcoin's going in the next 6 months or 3 months or even 1 month. It's where's the resistance near here where I can tell if it's going to go higher or pull back. And right now you're up into resistance. You're just underneath resistance. Therefore, as a technical trader, you favor a pullback. If it gets through that level, you start to go into neutral. If it stays above that level, you go bullish. It's very simple like that. It's no emotional trading. It's pure and simple. Follow the levels. Let the charts tell you. I always tell my traders this, and this is important to understand, is that the charts, when most people begin looking at them, it looks like a whole hodgepodge of nonsense. Really, what it is a foreign book, a book written in a different language. And it's up to you to learn that language. And when you learn that language, you start to get insight into the most probable. And this is important. It's not the guaranteed move. There's no such thing in trading. All right. Every day I'm out of the money on a trade, or, with all the trades I do, there's always a trade. I'm losing here. I'm making money over here and here and here, but there's always going to be a little bit of a loser. So the point is that it's all about probabilities. If you do 10 trades in a day, you want to win 8 of them. And the ones you lose on, you got to recognize quickly that you're losing on them and exit them. That's how you make millions in the markets. You don't make millions so many of these people out there, these newbies, they think, okay, I have a $2,500 account. I got to figure out how to make $25,000 by next week. Not reasonable, because yes, you can bet the farm, make money. Like heck, in 2021, everyone was making money in crypto. Everyone was making money in stocks. That's ultimately not feasible long term. Eventually you pick a bad one, just like anyone, just like I do. Eventually I pick a bad one. And ultimately you go broke when you bet the farm on it. And that's the problem. Make your millions, and you will make millions if you follow the recipe. Technical trading, personal discipline, position size. Those are the ones you want to follow. All right.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.